Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally lower as oil prices continue to impact markets. ICE Brent crude is trading above $107 a barrel. Investors are also digesting fresh economic data this morning. Just over 30 minutes ago, the Bureau of Labor Statistics released the February Producer Price Index, which measures wholesale price inflation. According to the data, headline PPI came in at 3.4% year over year. That is well above economists' estimates of 2.9%. Meanwhile, core PPI, which excludes the volatile food and energy sectors, came in at 3.9%. Economists were anticipating 3.7%. Here's what else is on tap this hour. Harvey Flax, NYSE parent company Intercontinental Exchange's director of U.S. interest rates futures business development. He's going to join me momentarily to discuss what markets are anticipating from the Federal Reserve when it announces its latest policy decision this afternoon. Meanwhile, NYSE-listed Snowflake just introduced Project Snowwork, which it says will bring agentic intelligence directly to business users' desktops to get work done faster. The firm's chief data and analytics officer takes us through how it works. And at 9:30 Eastern, NYSE-listed Farmer Mac will ring the opening bell ahead of its investor day being held right here at the New York Stock Exchange. Later this hour, I'll speak with Chief Executive Brad Nordholm about the message it's looking to deliver during today's event. But we begin with the Fed as the central bank's next policy decision is due at 2 p.m. Eastern. Joining me now is Harvey Flax. He is the director of U.S. interest rates futures business development at NYSE parent company Intercontinental Exchange. Harvey, welcome.
Good morning, Ashley. Thanks for having me.
All right. So what are the futures right now indicating about today's Fed decision?
So the futures market's pricing in a 99% probability that the Fed will keep its monetary policy rate, Fed funds, on hold this afternoon, maintaining its current target range of 3.5 to 3.75%.
All right, and the February jobs report surprised to the negative, while CPI was in line with expectations, though still slightly above the Fed's target. Why is the market pricing that the Fed will keep rates on hold and not address the weakening labor market?
Yes, I mean, what you have outlined, a deteriorating labor market, core inflation, mostly in check, but slightly elevated above where the Fed likes the target to be. On a different morning, we'd be having a conversation about the probability or the chances of potentially a Fed rate cut this afternoon. However, I guess the Iranian conflict, the oil price shock, and its possible implications on core inflation, market participants believe that most of the Fed's policymakers will vote to keep rates on hold this afternoon to assess further incoming monthly data and essentially just wait to make a decision on the trajectory of policy rates, monetary policy rates.
All right, Harvey, and has the oil price shock altered the market's view on short-term Fed policy?
Absolutely. Prior to the Iranian conflict, the market believed that the debate at the Fed was about timing. In other words, keep rates on hold, assess incoming monthly data, prepare 25 basis point rate cuts as needed, with that first rate cut priced in for somewhere during the summer. With the oil price shock, the market now believes that the debate within the Fed is not when to cut rates, but if to cut rates at all. As Fed economists are going to look at the duration of this event, in other words, how long oil will stay around $100 a barrel, and the implications of that on core inflation.
All right, and the Fed traditionally looks through energy price shocks. Why is this time different?
You are correct. The Fed generally looks through supply-side energy shocks as a one-off price adjustment. However, in this instance, what we find in addition to the oil and LNG price shocks, you also have about a third of global supply of helium, as well as over a third of the global supply of fertilizer passing through the Strait of Hormuz. Many economists believe that a short duration event, in other words, a short war, could drive core inflation above 3%. A longer duration of event could drive core inflation above 4% by the end of the year. The futures markets take that assessment, and they are currently pricing in a single 25 basis point rate cut for the very end of this year, the December Fed meeting.
All right, and the Fed will release its quarterly summary of economic projections at this meeting. What do economists believe the new projections will reflect?
Economists believe that this afternoon's SEP or dot plot will be mostly in line with December's, where the assessment was for a median single 25 basis point rate cut for this year. There is a small but growing group of economists that believe the events in Iran, the unknown implications on core inflation, may shift a couple of those dots over, and you can see potentially see a median of a 0% chance of a rate cut or hike for 2026.
All right, and what are the expectations from Fed Chair Jerome Powell's comments after?
Yeah, I would believe that he's going to have a very busy afternoon. Absolutely, he's going to have to address questions about the Iranian conflict's impact on rising core inflation, and that would be in conjunction with the deteriorating labor market. By definition, that is textbook stagflation, and I'm sure many questions will be about that and how the Fed will navigate that scenario. And of course, with the release of the quarterly SEP dot plot, I'm sure he will review the findings in that document, opine upon them, and field questions, a multitude of questions from the press corps on it as well.
All right, and what are the implications of the Fed monetary policy rate for mortgage rates and the housing market?
So the 30-year fixed rate loan in the United States is primarily driven by the yield on the 10-year Treasury note. Monetary policy rates drive short-term lending in the United States. In general, the trajectory of the monetary policy rate can or does influence the overall yield curve. What we're finding in this instance, some of it related to the past year's worth of economic policies, some of it now from, of course, the Iranian conflict. We find that the yield on the Treasury, the 10-year Treasury yield, is now about 15 basis points higher than when the Fed first started easing rates back in September. And the ICE rate lock mortgage future, the September 26 contract, is implying that mortgage rates will be about at 6.35% in September, and that's literally where they were last September when the Fed started this cycle.
All right, Harvey Flax from ICE, thank you so much for joining us at the New York Stock Exchange.
Ashley, it was a pleasure to be here. Thank you.
All right, thank you. We have plenty more to get to on NYSE Live, but first, ICE Experience, currently underway from Las Vegas, has brought together industry leaders to explore breakthrough strategies and connections, redefining the future of mortgage and housing. Here's a deeper dive into how ICE is using data science to lead the way across the housing ecosystem.
Data science can help address some of the biggest challenges in the financial markets. If we focus on the mortgage market and follow the life of a loan from origination right through its pricing in the capital markets, our data science capabilities can provide a deep level of insight and analysis to a variety of stakeholders.
At ICE, we have extensive data sets, especially around three pillars: the property, the mortgage, and mortgage performance. This trifecta of data and its history is a bit of a data scientist's holy grail. Let's imagine a single property for a moment, 123 Main Street. And before mortgage is a twinkle in its originator's eye, we can apply data science to gather and curate detail about the property and its transaction history. Once a mortgage is originated, it will land in a portfolio, either as a whole loan or as part of a mortgage-backed security. Data science and analytics actually allows us to provide insights along the way to the performance of that mortgage, prepayment, default, forbearance, even natural payoff, updated values, tax estimates, and we can also measure what's going on in the market around the property or things that may impact the performance of that mortgage. As that loan on 123 Main Street is transacted, data science will be used to identify further risk and opportunity.
Quantifying loan-level climate risk requires knowing a suite of information about the property being mortgaged. We also need to model how severe a given hazard, like wildfire or flooding, will be both now and in the future at that specific location. Bringing all of this data together to quantify loan-level climate risk requires using data science tools to spatially join data sets of different resolutions, address data incompleteness, and build models to infer asset-level risk. The Sustainable Finance team has computed loan-level energy usage, energy bills, and carbon emissions, a statistic that helps us assess the affordability of a property over the duration of a loan.
The secondary markets are a way for originators to clear loans off their balance sheet. This means that they can take more risk and help more borrowers. That loan that we scored and got performance information about, it would likely end up hedged using a rate lock future on one of the ICE exchanges, and it's probably going to end up in a loan forward vehicle called a TBA. As this loan goes through its life, These models for projecting prepayment and defaults become key in figuring out how the loan will perform on the forward.
More investment flows into funding mortgages and housing, which puts more families in homes and tends to be the most important asset many people will ever own.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Joining me now is Hank Smith. He is the Director and Head of Investment Strategy at Haverford Trust. Hank, welcome to NYSE Live.
Good morning. Great to be with you, Ashley.
So oil has been the headline. What is the cleanest way to explain how higher crude filters into U.S. stocks?
Well, I think into stocks, it's easy to see how it filters into the economy with higher gas prices. Remarkably, actually, the stock market has held up overall quite well. We're only a few percentage points off our all-time high set earlier this year. Clearly, certain sectors are performing better than others. Energy, obviously, the biggest beneficiary of that, but basic material is doing very well. Selective industrials are doing very well. Up until just recently, consumer staples were doing well. All of the so-called non-AI trade, or the Mag 7 or top 10, however you want to characterize it, has been doing pretty well this year, as we've seen a rotation in the market, a broadening out of the market, while you've seen significant declines in the AI trade. But this is really a best case scenario, and remarkably, the markets have held up pretty well over the past 18 days since the start of this war.
All right, is the market treating this as a short-term shock or something that can keep prices elevated for longer?
Well, I think the market is very much afraid of the so-called taco trade. Trump always chickens out. And if this war ends relatively shortly, you could see oil prices collapse and the stock market shoot right back up. And market participants don't want to miss out on that trade. Clearly, if this lasts more than a month or 2 months, That is not priced into the market today, and that would include oil staying elevated at $100 plus level. That's not priced into the market today.
All right, and PPI data dropped this morning. It came in a lot hotter than expected. What are you taking away from the report?
Well, prior to this Fed meeting yesterday and today, the futures market had already come down to pricing in just 1/4 point rate cut for this year, and now with this report, we might have the futures market pricing in 0 rate cuts for this year. So the Fed is on hold, that is for sure. But we knew that at least for the next several meetings. Now, this is just 1 month. It doesn't necessarily make a trend, but it is concerning that in several measures of inflation, PPI and the PCE, you're stuck above 3%. CPI is a little bit below that, but we've really been in this range now for quite a bit of time, and that's problematic for the Fed. Is it problematic for the market? I'm not so sure, because historically, if you go back 40 years, the average inflation rate has been around 3%, not around the Fed's target of 2%. But you certainly don't want to see inflation trending higher through this year. That would be problematic for the markets.
All right, and as we discussed, the Fed's next decision on interest rates comes out today at 2 p.m. Eastern. And obviously, it's expected that rates will hold steady. But what questions do you think policymakers need to answer here?
Well, I think they have to acknowledge that inflation has been stubborn. It's been sticky. They also have to acknowledge the impact of the war and higher oil prices, and at the same time, a softening labor market. So they have to balance all of this, and as always say, we're data dependent. And so I think this is going to be a very tricky a tricky statement for the Fed. And obviously, as you just said, everyone knows there's going to be no rate action. So the statement is going to take on extra importance.
Is there anything else you'd like Fed Chair Jerome Powell to address during his press conference?
Well, I think he's going to avoid the whole nomination process of his successor. And I think he was pretty explicit a couple months ago in his response to the president. So I think he's going to avoid all of that. But I think he's also going to acknowledge that the U.S. economy is in pretty good overall shape. Yeah, the labor market has softened, but the leading indicators of labor, namely the weekly jobless claims, remains at a historically low level. So there's not a problem with firings. You do have added fiscal stimulus this year with the passing of the implementation of the One Big Beautiful Bill. Monetary policy remains accommodative. Corporate profits are very healthy. Corporate balance sheets are healthy. Yes, we do have some issues in the private credit market, but I don't think they're going to be systemic to the financial industry and certainly to the broader markets. So overall, we have a fairly good setup for this year. The war, if it is a short one, will be in the rearview mirror very quickly.
All right, Hank Smith, Director and Head of Investment Strategy at Haverford Trust. Thank you for joining us on NYSE Live. We're going to head to a break now. We will be back with an exciting announcement from Furore when we come back.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this morning, NYSE listed Snowflake launched Project Snowwork, which the company says will bring agentic intelligence directly to business users' desktops to get work done faster. Joining me now is Neha Tafvizi, Snowflake's Chief Data and Analytics Officer. Welcome to NYSE Live.
Thanks for having me, Ashley. It's a big day for us here at Snowflake. We're entering a new phase of enterprise software. This is what we call the agentic enterprise. And it's where systems don't just analyze data anymore. They help decide what should happen next and execute workflows end to end. You're already seeing this with AI agents across engineering, sales, support. But without shared context and governance, things can get fragmented pretty quickly. That's the challenge and also the opportunity, and exactly why we built Project Snowwork, to connect data, intelligence, and action in a unified, trusted way for businesses.
How does this translate to the user? What is the user experience like when they use this platform?
Yes, Project Snowwork is a Snowflake's enterprise AI platform that's built to help business users actually get work done, not just get answers. Think about everyday tasks like forecasting or analyzing churn or putting together a sales customer QBR. Snowwork can now plan and run those for you end to end using your company's real and governed data. It's a shift from to AI that delivers finished outcome. And that's where the real productivity gains start to show.
And why was now the right time to debut Project Snowwork?
Yes, we are moving to a stage that AI is driving real productivity. And a lot of the questions that we are getting and what's very top of mind for us is how do we worry about the trust, right? How can humans trust AI agents to be able to not only answer the questions correctly, but end to end do these workflows for the users automatically? And Snowflake sits at the right intersection where we have governance for your data, enterprise data already enabled. So you know that when the users are accessing their data, they can get access to the right data at the right time, and then they can automate their workflows.
And what makes this offering different than similar products on the market?
Yeah, I mean, the biggest differentiator here is the trust that you can put into these workflows, right? And when we talk about trust, there's one is accuracy and one is governance. When you ask an AI agent to do a task for you or answer a question, a lot of time these general purpose AI assistant connected to your enterprise data can give you the wrong answer confidently. How do you know that the answer is correct? How do you know that the users can only get access to the data that they should? And that's where Snowflake comes in, and particularly Project Snowwork, where it's already enabled on top of your Snowflake's governance, and it can take those actions for you end to end with accuracy and high trust.
All right, and we understand that you're already using this inside of Snowflake. What does that look like for Snowflake day to day?
We do, and it's been pretty eye-opening. We see multiple examples of that. For example, our sales team previously would have to use multiple sources of fragmented data to get the information they need. For example, if they were putting a sales QBR together, now they can do that from one interface within minutes. Similarly, our earnings prep can now be done automatically, shortening a workflow that would previously take us weeks, now just down to minutes. Our executives can get access to the data they need instead of having to go through fragmented sources of information to get their daily brief. Now they can get what they need from one source of information. We've seen this massively unlock productivity for us internally.
And how is agentic AI impacting the way people work?
Yeah, we are seeing this already across our customers. Today, we have more than 9,000 of our customers already on Snowflake AI and using this on a weekly basis across their platforms. And we are seeing real productivity gains as a result of that. Like Toyota Motors or United Rentals that we have seen using a lot of our AI products. I'll give you an example of United Rentals, which is using this across 1,600 of their branches to increase productivity and bring the insights to their workforce. And so this is no longer just an experimentation. It's really AI in production, and we're excited to bring this to our customers.
All right, thank you, Anahita Tafvizi, Snowflake's Chief Data and Analytics Officer. Coming up, Four Systems announced that it's achieved unicorn status earlier this week, and its CEO is going to tell us how its thermal technologies are setting it apart.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
You just saw Farmer Mac ring the opening bell. Their mission is to accelerate rural opportunities. They are holding their Investor Day this morning at the New York Stock Exchange. That is CEO Brad Nordholm. I'm going to be speaking to him after the bell to learn more about Farmer Mac. And the stock market is officially open for trade as oil prices continue to impact markets. Currently, ICE Brent crude was trading above $108 a barrel. Investors are also digesting the February producer price index, which came out earlier this morning. According to the BLS, headline PPI came in at 3.4% year over year and 0.7% month over month. Those numbers both well above economist estimates of 2.9% and 0.3% respectively. Meanwhile, the Fed is dominating headlines today. This afternoon, it's going to deliver its latest decision on interest rates at 2 p.m. Eastern. Well, to shift into company news, earlier this week, thermal technology developer Furor Systems announced that it had raised $143 million in Series D funding, vaulting the startup to unicorn status with a valuation above $1.6 billion. Joining me now is Sesu Madhavapeti, Furor Systems co-founder and CEO. Welcome to NYSE Live.
Thank you very much. Thank you for having me.
Of course, congratulations on this news. How are you going to deploy the new capital across Furor Systems operations?
Well, we are a company that is specializing in and innovating in thermal solutions for the AI era. And the data center is exploding, and there's a demand for more and more power to these data centers. But something that people don't realize as much is that all the power that goes into the data center dissipates into heat. And you need to have a very efficient way of removing that heat from the data center. And that's what we do. We specialize in innovating and bringing new technologies to bear in this critical area. Because if you don't remove the heat, then you really cannot consume the power. You need to have a thermodynamic equilibrium. And in order to do that, you need to have really innovative thermal solutions, and that's what we make. And we've got this incredibly innovative portfolio of products for removing heat, both in data centers as well as in edge devices, where edge AI is becoming big as well. And this product portfolio is catching fire. And so we're going to use the money that we've raised to expand our operations and manufacturing capacity to meet the demand.
Can you walk us through these cooling solutions like LiquidJet?
Absolutely. So LiquidJet is our innovative cold plate technology that we are offering for data centers. Cold plates are critical because they are in direct contact with GPUs, and they remove the heat from the GPUs. So when you talk about NVIDIA Rubin, you're talking about 2,000 watts or more of power that's consumed by each GPU. And all that power that's consumed by the GPU converts into heat. So what the cold plate does is it sits right on top of the GPU and extracts all that heat in real time. And our cold plate offering is called LiquidJet, and it's 75% more efficient than traditional cold plates that are currently used in the industry. And at the same time, it's less than half the weight, because weight of thermal solutions is also a big concern. And we are massively reducing the weight of these thermal solutions and at the same time increasing the efficiency.
And how is the AI thermal stack solving the problem of heat across operations?
Well, think about the data center as a power station in reverse. If you look at a power station, what it does is it converts heat energy into electricity. And that's a big challenge because, data centers require more and more power. So you got to have a lot of power stations that generate that power. But once that power comes into the data center, what happens? You use all that power for running these GPUs for computation, to run AI models and agents. So when these GPUs are using that power, they are converting it back into heat. So in a sense, a data center is a power station in reverse. So you get all this power coming into the data center, it converts into heat. And what we are doing is making sure that you are extremely efficient in extracting that heat from these GPUs and then ejecting it into the atmosphere. So that's what a data center thermal solution does. You basically make sure that all the power that goes into the data center, when it converts into heat, you have a very efficient way of extracting that heat from the GPUs in the data center and then ejecting it into the atmosphere.
And we have less than a minute, but who are your customers?
All the hyperscaler companies are our customers, and all the GPU makers are our partners. So if you look at the supply chain for data centers, the hyperscaler companies are building these massive data center build-outs in order to be able to meet the demand for inferencing and training of AI models. And these hyperscalers are building these data centers using the latest GPUs from companies like NVIDIA and AMD. And also they are making their own ASICs in-house. But all these GPUs and ASICs, as they consume power, they require the best thermal solutions to go along with them to ensure that the heat is extracted and ejected. And that's what we do. We make the best data center thermal solutions, as well as thermal solutions for edge devices like your notebooks or tablets or smartphones. They also are becoming AI factories for inferencing. So they too need cutting-edge thermal solutions to be able to increase the amount of heat that can be dissipated from these devices.
All right.
That's what you do. Both for the edge as well as for the data center, we deliver the best thermal solutions that meet the moment and ensure that the AI revolution will continue unimpeded and is not held back because of poor thermal solutions.
All right, thank you, Sesu Madhavapeti, a Forge Systems co-founder and CEO, for joining us on NYSE Live.
Thank you very much.
Coming up, Farmer Mac CEO Brad Nordholm will share his views on the state of U.S. agriculture and how his company is well positioned for growth in the sector. But first, I was recently in Utah for the Vast Forward 2026 conference, where leaders collaborated on shaping the future of artificial intelligence. Among the leaders I spoke with was Vast Data founder and CEO Renan Halleck, who shared his vision not only for the event, but for the evolving technology at large. Take a listen.
So we're building that software infrastructure layer for AI workloads. We started by building a new type of architecture that broke the trade-off between capacity and performance in the world of storage. And then we added database capabilities and data engine, compute orchestration capabilities. And really, as this new stack is getting built for agentic workloads, we are that underlying infrastructure for it.
Why do these structures need underlying infrastructure?
So historically, if you look at any technological revolution that we had, it was always new hardware and then a killer app. In the PC, it was a word processor with Intel CPUs. In the mobile, it was a Nokia phone with people talking to each other. And then you have an operating system that comes in, a Windows or an iOS, and that enables a lot of different applications to be written on top of this abstraction layer. And we're right at that point with AI. We have the GPUs that are the new hardware, we have the chatbot that is the killer app, but there are so many other things that we could be doing with this new technology. And so we're trying to make it simple, we're trying to make it secure for everybody to be able to leverage all of this new stuff.
And what types of customers are you working with? Who are your customers?
It's a combination of AI native companies, the model builders, the AI clouds, and a lot of enterprises that are now starting to go on this journey with us.
I know a lot of exciting news is coming out of Vast Forward. Can you share some of the announcements with me?
Of course, we have some shared announcements with NVIDIA on new solutions that we're bringing out to market with them. We have our tuning engine, which is a way to do fine-tuning and reinforced learning for agentic workloads. We have our policy engine, which is all about making sure that you can deploy AI safely without fearing information leakage or other things that could potentially happen. There's a lot of good stuff. We have an announcement with CrowdStrike around combining our AI operating system with their security system to make sure that people can, again, feel safe in this new world. And a lot of customers came. This was our first conference, so I didn't know what to expect, but more than 1,000 people in addition to the vast employees. And so it's been a good week.
Do you think when you're working in the AI ecosystem, it's important to keep innovating?
There's no choice. Every 2 months, it's a new world. And if you don't keep innovating, then you get left behind. And our customers demand that from us, and that's what we love to do. I think we're at a point today which is unique. As you said, we're 10 years old. You also said this is our first user conference. And so from one perspective, we're a little bit grown up. We're 1,200 people. We've built a pretty big business. On the other side of that coin, we're just getting started. And there aren't many companies, I think, that have that ability to innovate at large scale. Small companies can innovate small scale. Very big companies don't know how to innovate anymore. And so we're taking advantage of being in that sweet spot.
Do you think with AI dominating the markets and the headlines, if companies don't get on the AI bandwagon, they're going to be left behind, similar to the internet?
Yeah.
You know, when the internet became popular.
I think it's even bigger than the internet. I think for the first time, we're building machines that will be able to do almost everything that people can do. And anybody who is ignoring that will not be competitive 5 or 10 years from now. We tend to be that first piece of technology that people adopt in order to make themselves AI ready, even before they start leveraging the AI applications, because we are at that infrastructure layer. And so we're seeing a lot of very traditional, very conservative organizations understanding that and starting to make that change.
If an organization does want to adopt AI, what are some of the first steps that they could take to move in that direction?
Well, the first thing you need to do is learn. There's a lot of new things. There's a lot of new words. There's a lot of new ideas that need to be understood. And I think whoever is curious and likes to learn new things will understand them very, very quickly. And then the next thing you need to do is understand what you need from an infrastructure perspective. It starts with power, and then you need new hardware, and then you need new software infrastructure. That's our layer. And then, of course, start to play with the models and the applications. But yeah, there's no way to do anything in the future without leveraging these technologies.
And speaking of learning, did you learn anything new at Fast Forward?
A lot. I've been spending the last few days basically in back-to-back meetings with our customers, with our partners, and from every conversation I learned something. That's how we know what to build. They tell us what's working, what's not working, what their challenges are. They teach us about new things that we didn't hear about yet. And that's my favorite part of this conference and of building out this company. It's that we get to work with very smart, very interesting people, and they basically teach us every day.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. The Federal Agriculture Mortgage Corporation, or Farmer Mac, just rang the opening bell to recognize its Investor Day set to kick off at 10 a.m. this morning at the New York Stock Exchange. Farmer Mac's mission is to make financing more accessible by providing funding to American agriculture and rural infrastructure. Joining me now is Brad Nordholm, CEO of Farmer Mac. Brad, welcome to the New York Stock Exchange.
Thank you, Ashley. Happy to be here.
All right, so Investor Day is happening soon. Right after this interview, you have to go upstairs, 10 a.m.
Yep.
What are you most excited about for Investor Day?
Well, obviously, we stay in touch with our investors regularly, but periodically, we like to have these kinds of days where we can bring out our management team and really engage with them and get some good back and forth going between our investors. We find that live interaction helps engender really more trust in what we're doing and reinforces the strong performance we're having.
Do you think there is a value or benefit to being in person with your investors?
Absolutely, yeah. I mean, we regularly travel to meet with them. Of course, we have a lot of calls, but there's just no substitute for periodic in-person interaction.
What is Farmer Mac's mission?
We are here to enhance liquidity for rural America. Ultimately, what that means is we're here to support economic development opportunity in rural America, and especially the people of rural America. We operate in all 50 states across 5 business segments, and ultimately we measure our success by how much capital, how much money we provide to sources of liquidity. Keep in mind, we're a secondary market, so our customers are really the financial institutions dealing directly with those customers.
What is driving growth for Farmer Mac?
We're having a lot of growth right now, and it's accelerating going into 2026. There are a couple of reasons. One is that in American agriculture, there is a bit of a generational transition going on right now. That's stimulating additional demand for mortgage credit to finance farms and ranches. Also, up and down the food chain, innovation, new investment, new processing facilities, that requires capital. And then a real infrastructure, including broadband, including energy, electric power production, which has been a big topic recently. Enormous demand in rural America for those two.
How would you describe the current state of American agriculture?
Well, the headlines right now paint a rather dire picture. For the last couple of years, we've had pressure on prices for inputs. Think fertilizer right now, which has been a headline item with the situation in the Middle East. And in a number of the major sectors, corn, soybeans, wheat, cotton, rice, we've had depressed prices. So there's been a bit of a squeeze in some of those major agricultural commodities. Ultimately, we finance farmers growing 120 different commodities across the U.S. Many of the other sectors, for example, meat proteins, are doing extraordinarily well. So it's a mixed picture. We have seen these cycles before, and we expect that over the next year or two, we'll have a firming in prices for some of these major commodities, and the headlines will improve.
Okay, and we only have about 30 seconds left, but what is your hope for today's Investor Day?
My hope is that we're able to really show the excitement that we have and the real growth prospects that we have, especially given a very dynamic management team.
All right, Brad Nordholm, CEO of Farmer Mac, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.
All right, coming up, a recent survey revealed what tech hiring trends are gaining momentum and how much AI knowledge is required for early career jobs. We're going to dive into those details coming up next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. CodePath is on a mission to reprogram higher education in order to create the first AI native generation of engineers, CTOs, and founders. The organization recently published a survey revealing what companies are looking for from new tech hires. Joining me now is Michael Ellison. He is the co-founder and CEO of CodePath. Michael, welcome to the New York Stock Exchange.
Thanks for having me.
All right, so what were the biggest takeaways from this survey?
Yeah, so we interviewed over 200 engineering leaders, and 38% indicated that they were decreasing their early tech talent hiring. 1 in 7 said that they were pausing early tech talent hiring. But the key takeaway, and what was most pronounced, was that there's massive demand for AI proficiency, but the way that they are hiring has shifted and changed. They're decreasing the importance of, say, a degree or credentials. What's much more important is your demonstrated experience. So that means, are you contributing to open source? Are you building side projects? So we've seen a flip-flop with what the market is looking for versus what a lot of young people are able to demonstrate if they've just gone through a typical degree program.
I understand it found that AI skills are really necessary, like you mentioned, not just a luxury, not a nice to have. How has that shifted over the past few years as we've heard AI being talked about more?
Yeah, so we're an education nonprofit. In the past couple of weeks, we've had 4 Fortune 500 companies that are ranked in the top 30 C-suites reaching out to us for upskilling. And this is not just a nice to have. This is a hair on fire, CEO level initiative across a lot of companies, upskilling the workforces, as well as trying to make sure that they have the right talent as a strategic imperative.
Where are the biggest skill gaps employers are seeing when it comes to AI?
Yeah, so I'll mention 2 areas primarily. So AI has made software much more powerful. It's made what you can build much more powerful. And so there's a skill set that is more associated with an architect, engineering architect, able to build and maintain and direct large-scale systems. And then there's a second area, which is because it has become so much more powerful, the workers who are most valued, they are more multidisciplinary. They are able to have domain expertise across a number of areas. So gone are the days that you can be more siloed, more specific, just be a coder. Now it matters much more your depth across multiple areas as opposed to one.
How are people learning about AI? Like, what curriculum is out there? Is it being self-taught, or are we seeing, actual curriculum and programs for AI learning?
So you see a lot of beginner level AI fluency. Colleges and universities, a lot of employers have been making investments, and the idea is let's do anything around AI that is going to get people using it. But that's not actually what the market wants. That's not what is going to increase salaries and earnings. What the market wants is AI proficiency. And that's where there aren't very many great learning opportunities that go to the depth that's required to be able to really understand how to get the ROI that companies are looking for. And it has to be connected to specific domain expertise. So if you're looking at marketing, you're looking at finance, you're looking at any of these areas which are dramatically increasing their demand for AI as a core skill set, then it's proficiency, but it has to be directed at the right domains and intersecting with business value. So we're not seeing as much of that as we should be.
And I understand in February you announced a partnership with Anthropic. Can you break that down for us?
Yeah, so very exciting partnership. We became Anthropic's first U.S. economic mobility partner. And there's 3 key pillars of the partnership. Number 1, we're releasing a number of applied AI engineering courses for credit at scale directly in colleges and universities across the country in order to make sure that students, especially from low-income, first-generation backgrounds, inside community colleges, state schools, get exposed to the tools that will be the most powerful to make sure that they can thrive in the area of AI and what's doing to the labor market. So that's number 1. Number 2 is we're partnering with their technical and curriculum experts to provide access to faculty members to enable them to integrate AI responsibly and safely into their curriculum to improve learning outcomes. Number 3, and this is the really exciting one, a shared research agenda where we're asking critical questions, leveraging CodePath's reach across schools in order to test how can we best implement AI to accelerate learning inside the classroom. What specific skills and competencies are becoming more durable and will increase earnings for learners so that then we can make sure that we're open sourcing and sharing these learnings with the broader academic community.
We have just a few seconds left. Do you think AI is here to stay?
Absolutely, absolutely. You probably hear this a lot, but a lot of folks are talking about the best invention, biggest impact since the invention of electricity. So,
all right, Michael Ellison from CodePath, thank you so much for joining us at the New York Stock Exchange. That is going to do it for us on NYSE Live. You can catch us on those streaming services at the bottom of your screen, and we will see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?